literally turn the tables on the banks and the financial institutions to take all the power of those systems and strategies they've been using for years against us, or certainly for their own advantage, and make those available to the average person. That's the ultimate Wall Street to Main Street hack right there. But it's all about saying, talk about the evolution of guidance, right? There was a time when the only way that we could know where we were going was a sundial, way before our time, right? But there was a time when that's all you pretty much had. And then it was a compass. Like my grandfather was obsessed with compasses. He always had one on the front dash of his car. And then we had maps, rudimentary maps. And then we had something called Tom's Guide. And then we had MapQuest. Now, MapQuest was fun for you young people out there because it would tell you where to go, but it would say turn right here. And you're like, well, at the street or out of my driveway? And then the problem is if you got turned around, you didn't have another computer run out of their printout, you were kind of stuck. Here's why GPS is so powerful. There's three reasons, two of which most people don't think about. Yes, the goal is to get you from point A to point B as quickly as possible, right? But the second is you can customize the route. Shortest route, fastest route, avoid toll roads, avoid highways, because then it can dynamically evolve to your personal situation and preferences. But the most important thing it does is it tells you in real time where you are in the scope of that travel. My mom lives on the west coast of Florida. I've been there hundreds of times. I know exactly how to get there. I could get there with my eyes closed. But when I go there, I still click mom's house on the GPS. Well, why? Well, number one, as your parents get older, the roles change. And every 20 minutes, my mom's asking me, what time you going to get here? What time you going to get here, right? So it's like when the kids would say, are we there yet? Are we there yet? So now I can say, I'll be there in 47 minutes. Now, here's what's also important. Travel involves things that are a lot more complicated than just point A to point B, just more than distance and speed, right? It has to do with a railroad crossing, road construction, car accident, right? Stopping to go to the bathroom or getting something to eat if you have kids or getting gas. And what is it able to do? Immediately recalculate, recalculate, recalculate. Now, having been a financial planner for decades, the number one flaw, CJ, in people reaching their goals is they operate under the fundamental premise that people's income is going to stay exactly the same. And we know that's not going to happen. Even if you are a salaried employee, you could lose your job, or you could get a bonus or a tax refund. Your income could change, or you have a second job. But the big why factor is expenses. Most financial plans operate on the premise that both these things stay the same, income and expenses. Well, even if your income did stay the same, for argument's sake, even though there's a lot more self-employed people, et cetera, what changes for everyone is expenses, especially if you have children, because there's a tragedy about every other Thursday afternoon. The car breaks down, the washer quit, the kid needs braces, somebody broke an arm, something happens. So when you're a financial planner and you do an annual financial checkup, that's about 11 months too long because things change dynamically in a family all the time. And I could lay out the most incredible financial plan for you in the world, but then you see a commercial for a trip for Disney or a fancy new car, and that whole plan goes right out the window because we don't understand the relationship between what we're doing now and what it leads to. Now, let's talk about the other part of that New Year's resolution, fitness. Again, eat less, exercise more. How hard could it be? Here's why it's hard. Because we don't burn the exact same calories because we don't eat the exact same foods in the exact same quantities every day. So that's a moving target. The other moving target is we don't burn the exact same calories because we're not involved in the exact same physical activity for the same duration, the same intensity every day. So even though your finances might not change daily, they probably change weekly or monthly. Your eating barometer between calories in and calories out changes hourly, day by day, right? So how do we track that? Well, let's say for argument's sake, I invented a magic fork. Now, CJ, let me say, if I ever figure out a way to invent this, I love you, but I won't know you anymore. I will be living on a private island somewhere, and it will be long distance to get a hold of me, okay? But if you had a
Right.
magic fork, and every single time you took a bite of food, it would tell you exactly how many calories that bite of food represented. And then you could turn it over, and it would show you a picture of exactly what you're going to look like if you continue to eat that way 90 days from now. Now, you tell me, would that not in real time impact the way you view what you're eating and what you're doing?
Absolutely.
100%, right? So you might say, I want one bite of chocolate cake, but I'm not going to have 10. See, we don't get that kind of real time feedback. People now have pedometers and all kinds of other things, right? Joining the gym doesn't mean you're going to lose weight or be in shape. If you join the gym and you get a workout partner and you get a pedometer and you monitor your heart rate and you get a personal trainer, well, now you've increased the likelihood you're actually going to have success, because the road to hell is paved in good intentions, right? You can plan to do a lot of great things, but follow through, results is where the rubber meets the road. Execution is everything. So when we came up with the idea of developing financial GPS, literally having a dashboard that tells you the day, month, and year you would be totally and completely debt free, and in the process, how much interest you saved and exactly how much you have left at any given moment. And then any decision you make in real time tells you exactly the impact. Maybe you stop going to Starbucks so much. Maybe you got rid of that storage unit with a bunch of junk you don't even use anymore. And the system says, boom, you just saved 7.3 months. You just saved $6,427. What if you could create a what if scenario? I'm going to throw my brother under the bus here for a second, okay? But a couple years ago, he was looking to buy a new fishing boat. He loves to fish. He lives in Michigan. He's a phenomenal fisherman. He's forgot more about fishing than most people in this lifetime will ever know. But he said, well, honey, it's like $8,600 or something like that. He goes, but it's really only $175 a month. Well, the system calls BS, because the system says, guess what? It's not only not $8,000, it's definitely not $175 a month. It's really $13,374.11, even if you paid cash, because it is now the opportunity cost associated with making that purchase decision over dedicating it to debt service or other objectives. Now, you may or may not still do it, but now looking at something that the bank sells you as $175 a month is very different than something that's $13,000. Or going on a trip. It makes for some very interesting conversation around the kitchen table, because now the spouse may say, hey, I want to go on a trip for Disney. The husband may say, I want a fishing boat or something. And now it says, you know what? Let's talk to our virtual online financial planner and see what it says. And the system has a what if scenario. It says, this is the cost and this is the impact long term. That is one of the most powerful things that we've ever been able to create, but literally financial GPS, or GPS for money. And literally, let's be honest, the time has come for us to modernize money and the leverage and use of money and finances in the average family's life.
Man, that is so true. As a matter of fact, I remember going through the typewriter age, right? I mean, I remember typewriters, and they weren't as prevalent, right, when I was coming up, but we still had them around. I still know what one is. I mean, you ask someone
Mhm.
now, these young people, they don't know what a typewriter is, but we have all
Their
these things
typewriters
that
right
are
here. That's what their typewriter is right here.
exactly. Oh, you mean that little keyboard thing that comes up? Exactly,
That's right.
man.
That's right.
And so I'm like, oh wow, we're in the 21st century. This is 2024, and we are still using what I
Mhm.
call fossilized banking, right? We're still getting fed and still following a system that hasn't been working for us. I mean, they tell us
Right.
about rate of return, the rule of 72, right? And all of these things. We're talking about the market myths. What's another one,
Yes.
man? They say, let's just take one example here. Go ahead and buy term, invest the difference. But
Mhm.
like for a majority of my life, I've heard these things, right? And then you're wondering, okay, well, now that I know how to make money, like that I need to make my money work, how do I do that? Where
Mhm.
is the how? Right. And so when you're talking about rate of return and market myths, it is a breath of fresh air that you actually have something that will assist you in knowing where to put your money so that it can actually work for you versus
Correct.
just getting fed a bunch of rate of return, guys, and you did invest your money in the stock market. Well, I mean, how much, and all these things. Instead of having all of these questions, now you have an answer. And so I just wanted to have you speak on actually the rate of return and some of these market myths right
Sure.
now.
So I'm gonna hit on this one. I, having been a financial planner for many years, and I know, we're not giving direct financial advice here. I'm not speaking directly to the audience here without having done consulting from a financial advising standpoint per se. We're not CPAs and accountants, et cetera. There's certain things that are just universally true. So I'm going to talk about one of the things. Every once in a while, I hear somebody tell me, "Wow, I mean, CJ, I wouldn't want to pay off my mortgage because I get a tax break from it." All right, let's talk about that one. Okay.
Yes, that's
First of
perfect.
all, yes, if you have to have a loan, you want to have the lowest interest rate possible. That's pretty obvious. And yes, it certainly helps if you have the ability to have tax deductibility to it. But that really only represents a, let's just call it a 30% benefit, which means I've got to pay $3 to get a $1 back. Well, I now have to incur a debt for the benefit of simply saving 30 cents on the dollar that I spent. What about the other $2? That makes absolutely no sense. Imagine you giving me $3 and me giving you one back. How many times do you want to play that? You would not, right? So yes, if you have to have a debt, it makes sense to have it be a low interest rate and be deductible, clearly. But you don't create a debt or maintain a debt for the sheer benefit deductibility. And quite frankly, I hate to say this, but I think the days are numbered in terms of us maintaining that tax deduction anyway, because the government's so in debt, they're going to be looking for ways they can pull that money back. And the reality is, it was created as an additional incentive for people to have home ownership. Most people don't need a lot of incentive to want to do that. If